How do short-term rental platforms like Airbnb complicate Canadian non-resident taxes? For many non-resident property owners, platforms like Airbnb, Vrbo, and Booking.com seem like easy ways to earn income from their Canadian property. But what often feels like a simple rental arrangement quickly turns into a tax maze when the Canada Revenue Agency, CRA, steps in. Short-term rental income creates a unique set of tax complications for non-residents, from classification issues to withholding requirements, and ignoring these can result in costly penalties. Let's explore why Airbnb and similar platforms make your non-resident taxes more complex and how to manage them properly. CRA classifies short-term rentals differently. Under CRA rules, short-term rentals, stays under 30 days, can blur the line between rental income and business income. If your property is rented frequently and you provide services such as cleaning, meals, or concierge assistance, the CRA may classify your activity as a business rather than a passive rental. Why does that matter? Because business income is taxed under Part 1 of the Income Tax Act, not Section 216. You'll need to file a corporate or personal tax return in Canada, not a non-resident rental return. This reclassification can increase both your tax rate and your reporting requirements. Airbnb and platforms report your earnings. Airbnb and other major platforms are now legally obligated to report host earnings to the CRA. That means even if you don't voluntarily disclose your rental income, the CRA can still identify you through data sharing agreements. If you're a non-resident who hasn't reported Airbnb income correctly, you risk retroactive taxes on unreported income, interest charges and penalties, potential reclassification as a business for multiple years. The CRA is especially vigilant about short-term rental compliance because these platforms have made it easier for non-residents to operate rental businesses remotely. Withholding still applies. Even if your bookings come through Airbnb, 25% withholding tax still applies to your gross rental income unless you file an NR6 form and elect under Section 216. Some Airbnb payouts go directly to non-resident hosts, which makes withholding tricky. If no Canadian agent is designated, you are personally responsible for ensuring tax is remitted to the CRA. Failure to do so can result in full tax liability, interest, and penalties, even if Airbnb facilitated the booking. GST HST may apply to frequent short-term rentals. If your short-term rental revenue exceeds $30,000 CAD in a 12-month period, you are required to register for GST HST. This means you must collect sales tax from guests, remit it to the CRA, and file periodic returns, even as a non-resident. Many landlords are unaware of this rule, but the CRA has been aggressively enforcing it in recent years. Record keeping is crucial. Keep all Airbnb payout records, expense receipts, and guest invoices for at least 6 years. The CRA may request proof of your gross income, cleaning services, or fees paid to Airbnb. Digital platforms make tracking easy, but they also make auditing easier for the CRA. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.